Hey everyone, Couch Investor back to another video for today. So let's talk about Intel. If you're an Intel shareholder, maybe right now you don't even feel the pain because we're already immune to that. Yes, we are getting dividend payouts. That's great. I think we're going to get one pretty soon as well. Okay, awesome. But let's not kid ourselves, right? Last quarter was horrible. We're going to have a quick look at that again. Just a quick recap. Then the next quarter might be the same thing. I don't think it's going to be an excellent quarter. It's going to take a while. So it's difficult. And then even in the long-term plan, building those factories will take time, will take a lot of money. Now, the main point I want to make in this video is obviously what happens when those factories get built. Because it's great. You can build factories. Awesome. And then what? Then the big question is, can Intel still attract the biggest talent around? Yes or no? Obviously, do share your thoughts down in the comments below. Now, before we have a quick recap here, if you want to support me and this channel, do check out the link down in the description below to get the top 10 best stocks to buy now, or go to full.com/couchinvestor and make sure to check out all the other links in the pinned comment. So let's have a look here. So this is what Intel looks like in the last couple of years. So revenue were for a while, let's say, flat-ish, close to $20 billion. That's for every quarter, as you can see, since, well, the end of 2021. It has been going down, down, and down. Last quarter was, again, a complete disaster. We're going to have a look in just a second. Free cash flow was something that the company was obviously known for. Free cash flow positive, not so great right now. It's going to be negative for the full year. Return on equity was, again, very, very good. Right now, trending down, not so great. I think we're going to go lower than 20%. Hopefully, we can rebound from that, because once you're over that 20%, it's good enough. Obviously, drawdown since its all-time highs. Who would have thought that Intel would be down 57% since its all-time highs? I think very, very few. Then gross profit margins. Again, they say they will be back up to 55, maybe close to 60% over time. Let's see if that happens. Let's hope that happens, because below 50%, it's a big no-no. And then the PE ratio, obviously, yes, the price can go down, but if the financials go down as well, it doesn't really help their PE. And this is for the next 12 months, 12.8 times. We know that earnings are coming down, so that's one of the main reasons why it's a bit higher than before, while the stock is lower. And like I said, a quick review from Q2, the complete disaster. So revenue came in at $15.3 billion. That's $2.7 billion below their own outlook, and that's down 17% year over year. Gross margin, 44.8%, 6.2 percentage points below their own outlook, and down 15 percentage points year over year. Earnings per share keeps going down, down, and down. 29 cents, 41 cents below their own outlook, and that's down 79% year over year. Now, what do they expect for next quarter? Basically, a bit better than Q2, but still year over year, not great. So revenue down between 12 to 17%. Gross margin 46.5%, so that's down 11.8 percentage points year over year. And then earnings per share of 35 cents. So yes, quarter over quarter, you can see a growth, but year over year, down 76%. And then obviously, like I said, adjusted free cash flow, negative $1 to $2 billion. Net capex of $23 billion for the full year. So in case you forgot, this is how it looks like with Intel. Now, it's not to say that the overall market is doing exceptionally well. No. We've seen with NVIDIA, we've seen with other companies as well, maybe not AMD. AMD is still doing quite well, but there are still something that most companies need to figure out. But Intel needs to figure out, a lot. And so they started to invest, they started to announce a lot of plans. Obviously, one of those is the $20 billion Ohio semiconductor manufacturing site. So they broke ground a couple of days ago, so that's great news. Now, obviously, it's going to take a while until this gets built. So the initial phase of the project is expected to create 7,000 construction jobs over the course of the build and support tens of thousands of additional long-term jobs at suppliers and other partners. Okay, fine. That's probably why they got some incentives from Ohio as well. I believe they got a tax break. I don't think it's in this article, but I believe they got a tax break for 30 years or so. So quite nice. And then some extra money, I think $2 billion or so. But Intel is also investing in education around there. Now, the facility will eventually employ 3,000 Intel workers. But again, the question here is, can they attract the biggest talent in the industry? And this is what I was mentioning before. So when the two factories known as fabs open in 2025, the facility will employ 3,000 people, as we've just seen, with an average salary of around $135,000. So money can be the appeal here. Continue here on this article saying that this project reverberated nationwide, said Michael Egbert, an Ohio-based official with the Labor's International Union of North America. We don't field calls every day from members hundreds or thousands of miles away asking about transferring into Columbus, Ohio. That's because they know Intel is coming. And this is the incentives I was talking about. So to win the project, Ohio offered Intel roughly $2 billion in incentives, including a 30-year tax break. Intel has outlined $150 million in educational funding aimed at growing the semiconductor industry regionally and nationally, which we know is of extreme importance, also in Europe. So with all that said, can Intel attract the brightest minds in the industry? Yes or no? I think the name Intel is still very, very respected in the industry. I think money is also a way to attract talent. As we've seen, Intel has attracted talent in the last couple of months, years as well, from AMD, from Nvidia, from other companies, because, well, maybe money is a very, very good incentive, and maybe the comeback story is another one as well. Again, yes, Intel has not been great the last couple of years as a company. If you're buying their chips, let's say, hasn't been performing as well as AMD. But the name Intel, again, is just, it's Intel, right? Everybody knows it. And if you're in the industry, if you're in the gaming area, let's say, if you're in the semiconductor groups, you know that people still respect the brand. And that's something to take into consideration. Again, in the next couple of years, maybe that can change. I don't know. Let me know your thoughts down in the comments below. I still hold my shares. I still collect the dividends, so I'm happy about that. Not so happy about the stock or the company's performance. Let's hope Pat and his team can turn that ship around. So if you enjoy this type of videos, let me know down in the comments below. Hit that thumbs up button and subscribe if you haven't. And I see you all in the next one. Bye-bye.